Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh, and with me is Sonia Shenoy. I think we should show Sonia Shenoy in the frame just to tell you that this is more like a traffic signal. We are in red and green, and that's partly because we're not able to make up our mind how the markets may move today. It's a market that has been dithering at highs, not able to quite cross that 11,171 mark. But what do we have by way of an ambience today? Asian markets are mixed because while Trump seems to be smoking the peace pipe, it's only peace still the tariffs are discussed. On the one hand, oil is a little higher, a little negative for us, but dollar is a little weaker, and that's usually positive for equity trades, especially EM equity trades. So again, mixed cues over there. When it comes to results, I think it was good results from JSW Steel, good results from Ambuja, L&T, Canada Bank also more positive than negative. But there have been disappointments from, say, Hero, from Crude Finance. Crude Finance normally never disappoints. It looks like very tepid growth over there. The Reliance AMC, Syngene, I mean, not... So really, we are getting, positive and negative cues. And the one big positive I was looking at, FII flows becoming positive, was all overturned yesterday with one big 1,000 crore sale. So really, the market is poised to go anywhere. I have no answers.
Okay, Lata, good morning. On that FI sell number actually of almost 1,200 crores, it includes one large block deal of around 650 crores in Z Entertainment, and that has one FI entity in that deal. So I guess, that's why that number is pretty skewed there on the FI number.
It came negative. That was my point. I thought the tide had turned.
Okay. Well, I guess you'll have to wait for a few more days before you get that conclusive evidence, right? But nevertheless, I think for me, today, of course, F&O expiry as well, so it would be important to track that queue. And this has been a good series for the bulls. I mean, the Nifty is up for 5% this series. The mid-cap index is up 4% this series. So maybe it's not so broad-based, but it's been a good series for the bulls. And, on L&T's numbers, I think the two biggest takeaways for me yesterday while analyzing the numbers was that the hydrocarbon business growth has been really strong this time around. So it sort of offset some amount of slowdown in the infrastructure margins, etc. And the ENC margin expansion is also something that, 100 basis points is no mean feat. So these two things, I think, may keep the stock buoyant. Of course, the way the stock has moved in the past, I don't know what would happen today. But these are the two important takeaways. Just goes to show that perhaps infra pickup continues. Also, Ambuja Cements follows ACC's numbers with that good volume growth. But lots of big numbers today as well, Lata.
Exactly. I take your point that L&T as a proxy for the country has reported positive things, both in terms of even the overall revenues and profits beat expectations. And you can squabble about infra margins. Overall, they were a good set of numbers. The amount of orders they reported is very encouraging, 36,000 crores in the first quarter. And it's not even their best quarter. It's one of their quieter quarters. But the course of the day is going to be determined by the results that come, and key among them will be Yes Bank. But there are a bunch of other results also that are coming. Maybe not, Nifty moving like Dr. Reddy's. It would be a quieter set of numbers. It doesn't change the mood, as it were. But then tomorrow we have ICICI and Reliance. When you have such big numbers coming, chances are the market will not want to take chances.
Okay. All right. So maybe we could just have to be a little more patient before hitting those all-time highs.
Just one word on this Canada Bank numbers. They were actually there were no bloopers. I mean, it was, first of all, there was growth. And the slippages were, of course, much lower than last quarter. Last quarter, everyone had ugly slippages. It was kind of middling kind of slippage number. The street might take heart from that and expect Bank of Baroda to report very good numbers, which come on Friday. So again, that could keep the PSU lot a little well cheered. So what I'm saying is there are a lot of green cues if you look for them, while there are some dampening cues as well.
Okay, well, let's keep an eye out on the PSU banks. Let's also tell you what our wise experts have to say as we head into trade this morning. Neelkanth Mishra of Credit Suisse says with the FY19 general government tax to GDP at a record high, slower spending and higher household financial savings as a share of GDP. Crowding out would be the second lowest in a decade. He says this should push down the currently elevated term premiums. He reiterates an outperform on L&T and SBI and underweight on autos like TVS Motor and Hero MotoCorp.
Okay, let's get you money market views. Mohan Shenoy of Kotak Mahindra Bank says the dollar index has topped out at 95.5 levels and is currently hovering around 94.2. He says further near-term direction will come from the ECB meeting that's underway today. He adds Brent crude is expected to trade in a near-term range of 72 to 77, and he feels the rupee is boxed in a broad range of 68.30 to 69.10. He expects the USD INR pair to trade in a range of 68.50, 68.80 for today.
And he also speaks about the bond market. He says crude and currency were two major variables that moved bond yields. He says the market is expecting a hike in policy rates in the RBI MPC meeting on the 1st of August. He expects the 10-year benchmark bond yield to trade in a range of 7.77 to 7.82% for the trading day.
Okay, and as always, over to Nigel for the world view.
Well, positive cues coming in from the US markets, all three of them ending well in the green. Remember, intraday, in their trading session, we had Donald Trump that came out with a tweet. He said that, in fact, he has a suggestion for the European Commission President, the Jean-Claude, in fact. And that's the suggestion that he gave them. He said, let's drop all tariffs, all subsidies, and let's work together. Now, post-market, in fact, he's come out with a joint statement, and he says that, in fact, they have agreed to drop, to work towards dropping all the tariffs, non-tariff barriers as well going ahead. So that's pretty good news, cooling down of these trade war barriers that we have been talking about. That explains those markets doing well. But today we'll have to watch out for the NASDAQ. Because remember, even yesterday's trading session, we saw some profit booking on some of those FANG stocks. Netflix as well was lower. And post-market close, we have Facebook that came out with a set of numbers. Remember, the stock was down nearly around 20% in post-market close. Even Netflix was down nearly around 15% when it came out with its set of numbers post-market close. But it ended up lower only by 5% on the next trading session. We'll have to keep an eye out on Facebook today. In terms of weighted, 6% on the NASDAQ. So that's going to be a bit of a drag today. European markets, though, they were a bit nervous ahead of that meeting between Donald Trump and the European Commission president. Those markets ended in the red. You had auto stocks as well as basic resources that were under some pressure. You had Fiat that was down nearly around 15%. Their former CEO passed away. And the commentary coming in from the new CEO wasn't very, very good. Asian markets this morning, they're more or less mixed. Now, most of them trading in the red as we speak. But keep an eye out on Brent crude prices moving back towards $75 per barrel. Not very good news. But dollar index has cooled down towards 94. Good news for metal stocks, actually, because these trade war barriers, that's cooling down. And also you have the dollar index that's cooling towards 94 odd. For starters, SGX Nifty indicating a positive start.
Okay, Nigel, thanks for that. Yes, Facebook was a big talking point overnight. They talk about a growth slowdown, but you know what was the growth slowdown? It slowed down to 42%. So it's still wildly growing, but not at a pace that it was over the past many years.
But,
of course,
I think, they have shouldered the rally in the NASDAQ, the FANG stocks. So this disappointment, my sense, is going to be taken very big by the tech stocks. I mean, there was absolutely no room for disappointment, and at 24% lower than expected earnings will not be taken kindly.
And after the privacy scandal that broke out, the growth has started to sort of peter out for Facebook. So let's see how that one shapes up. That's been actually the big talking point across the globe. But let's also get you some opinion coming in from Joseph Lavorna of Natixis on the US macros and the Fed rate trajectory and what they expect from here.
The Fed hikes rates in September, which is largely expected, mostly expected, 90% chance, 95% chance. And they reiterate their desire to hike again in December and 3 more times next year and 1 more time in 2020. If that forecast is reinforced in September, my guess is the 2 to 10-year note spread will be negative, possibly as early as October, but certainly by year end. If the curve inverts, let's say, in October, history would say the earliest you'd have a recession would be next summer, next August, and the latest would be August of 2020. In the last several years, the growth rates could meaningfully change. Growth can be revised up, could be revised down, but what we've seen, and it doesn't, again, happen very often, every 5 years, you do see economic history changed, and sometimes quite a bit. So I alerted people to the fact that, yes, the second quarter looks very solid, but what happened over the past year? The economy actually performed better. Let's say, for argument's sake, that potentially makes the Fed more aggressive in its interest rate hikes, and that comes back to what we were talking about regarding the yield curve.
All right, the stocks to watch today definitely will be L&T, Hero MotoCorp, etc. So we're going to talk about all that on the other side of the break. We'll be back with CNBC TV18's top 10 list of stocks to watch. Well, we are on the cusp of a new all-time high in our markets, and of course plenty of stocks leading to that. So let's get our research team to tell you about the list of top 10 stocks to watch for the day. L&T will be top of mind after the numbers came out yesterday post-market hours. Anisha, to summarize it, how did the numbers look?
Well, on a reported basis, yes, the numbers were beat on all parameters, but do remember there were a lot of one-offs in the numbers. So the adjusted numbers look a tad bit better than expectations still, but not as great, because the adjusted revenue growth came in at 12.5%. Even if you look at the consolidated margins, they were better at 10.3%, but the infrastructure segment margins have expanded by 100 basis points, though the expectation was it will be up by over 150 basis points. So a tad bit of niggling worry there, but the management is hopeful that the infrastructure margins will come back to the growth trajectory. The order inflows bang in line with expectations. Working capital as a percentage of sale has deteriorated a tad bit to 20%, but not too much of a worry there. The outlook is positive. They are maintaining all the guidance. They say FY19 is going to be front-ended on account of the elections. Just to run you through what brokerages are saying, Nomura has cut the target price to 15.93 because they are not very happy with the domestic infrastructure growth. Credit Suisse also says that infra segment did not meet expectations, but Macquarie says that the core ENC margin expansion is encouraging for them, and they expect the consensus upgrades to continue. So expect a tad bit of green on stock today.
Okay, just a tad of green. Anisha standards are demanding, but then, yeah, to be fair, one of the brokerages, Nomura, has even cut its price target. Sonia, I guess things will be much worse for Hero.
Yes, I expect the stock to be in the red. That's because the margins were below street estimates, and this is the lowest margin that they've hit since Q4 of FY17. But no, it's not because of the price war. It's more because of higher raw material costs and expiration of benefits at the Haridwar plant. Now, raw material costs as a percentage of sales has gone up to 70% versus 69 to 69.5% in the previous 2 quarters. And the management has said that because of the competitive environment, they've not been able to pass on the raw material costs entirely. Yes, they did undertake a price hike in April and in July, and they will do one more in the month of September and then pass on the entire cost. But up until now, they've absorbed a part of it, because of which their net realizations have fallen by 3.3% at 41,853 rupees a unit. So the graphs will also come up for you. Margins under pressure, realizations under pressure, and revenues also below what the street was estimating. So I expect the stock to be in the red, more so because now there is an expectation that competitive environment may get a little more tougher, because of which it may be tougher for them to sort of pass on costs.
Okay, so Hero Moto, though, again, some of the pressure was expected. We have seen both Hero and Bajaj suffer over the last 3 or 4 days. But I guess Ambuja can cheer up a bit despite that very big fine from the NCLAT, Nigel?
Yeah, that's right, Lata. In fact, the problem about that fine that they got is, can they increase prices going ahead? So we'll wait by for that. But in terms of the numbers, they were very, very good. Top line growth of around 5.5%. We were working with a growth of around 3.5%. So clearly that was a good growth. Encouraging to see that on a sequential basis, the realizations were up by nearly around 3%. That was much better than what the street was working with. And they have indicated they're focusing on sale of premium products, particularly the roofing products that they have sold. In terms of margins, the compression was to the tune of around 200 basis points. We were discussing that the compression could be nearly around 450 basis points. And take a look at that. You have volumes going up by nearly around 5%, but other expenditure coming lower. That explains why, in fact, we had a margin beat. And finally, the profit number looked good, aided by lower taxes and higher other income. Stock should open up in the green.
Okay, good to hear that always. Ambuja following in ACC's footsteps, as it were. Well, Rima, Bharti Infratel?
Well, mild green, Lata, to start with. While the revenues were in line with expectations, there was a little bit of a beat at the margin level, and the profits came in higher than expectations. One, on account of a lower depreciation compared to a year ago, as well as a higher other income. Now, we all know about the competitive pressures faced by the incumbents, as well as the exit of many of the small players. So as a result of that, the tenancies, or the average tenants which are housed on Bharti Infratel's towers, have been coming down. They've declined for the last 3 straight quarters from levels of 2.4, now down to 2.2. And also going ahead, the company's indicated that they have received an exit notice for 6,672 tenancies, but the actual exits are yet to happen. So pressure on the tenancies is likely to continue going ahead, but purely on numbers, a bit of a beat on margins and profitability, so could be in the green.
Okay, it could be in the green, but the one stock that could surprise today is Canara Bank. Abhishek will tell us why. Abhishek?
Well, Sonia, stellar set of numbers. If you look at the NII, it has come in at 3,883 crore. It has beaten our poll by 29%, and YOY there's a growth of 43%. Sequentially, there's a growth of 30% in the NII itself. And they have reported a profit of 282 crore versus our poll of a loss of 1,012 crore. So overall, in the PNL itself, they have shown a robust growth, and they have shown healthy recoveries also. So global NIM and the domestic net interest margin at 2.52 and 2.75% is the highest in last 11 quarters. The loan growth also is the highest at 12.7%, but the domestic loan growth for the first time has crossed 15% in the last 3 or 4 years. However, the niggling worry is the elevated slippage ratio. It has declined quarter on quarter, but the slippage ratio remains elevated at 4.4%.
Okay, and that is the perennial worry with PSU banks, isn't it? Okay, it just looks like growth may compensate for the higher slippages. Let's wait and see how excited the street is about this one. IRB Infra, Anisha?
Well, the numbers were very ordinary, a tad bit weaker than expectation when it comes to the top line because the company's construction segment did not really participate in the performance this time. The BOT growth was steady, revenue grew by 5% and the EBIT margins also expanded there. And that's the reason the overall margins are better than expected at 48% level. Now, the management says that the growth momentum will continue for the next 6 to 7 quarters. The order book is healthy for the company, but most important for them is to get the financial closure because the new projects need to start contributing to the revenue as well. They have taken an enabling resolution to raise around 1,500 odd crores, so the street will keep an eye out on that. Back to you.
Okay, thanks a lot for that. So no fireworks there. Rima, any fireworks in Intellect Design?
Well, on the downside, Sonia, so weaker than expected in terms of revenues as well as margins. Basically, 2 of their large deals got deferred into Q2, as a result of which their revenues missed and margins. Revenues declined by 6.5% quarter on quarter. Their gross margins were lower. The absolute EBITDA halved to about 4% versus 8%. That said, the reported profit is showing a big jump, and that is on account of a higher other income, which was boosted because the company sold some property in Hyderabad. The board has also approved fundraising to the tune of 100 crores via a preferential issue to the promoters as well as employees. So that could, provide a little bit of a boost, but purely for Q1, a miss on revenues and margins.
Okay, thank you very much for that. Reliance Nippon AMC.
Well, Lata, to begin with, the equity portfolio in the retail and equity assets have grown really strong. The retail assets have grown by 34%, while the equity assets have grown by 37%. But the disappointing factor is their PNL. The top line or the revenue growth has been at just 1.2% YOY, while the PAT has grown by nearly just 3% on a YOY basis.
Okay, thanks for that. Some more numbers coming in post-market hours. Sonal is here as always to give us a snapshot. Sonal, over to you.
Good morning, Sonia. I'll start with the good one. Sanofi India, it reported very strong set of numbers. Margin expansion of 480 basis points on a YOY basis as well as on a sequential basis is something that the street should like. Expect that stock to do well in trade today. Group Finance was another good set of numbers. The AUM growth at 16% on a YOY basis at 15,800 crore rupees. Also, the gross NPA, they came in at 0.6% versus 0.45% on a sequential basis. Looks good for the company today. Shriram City Union, that was a mixed bag. While AUM growth at 20.5% was highest in last 6 quarters, NIMs were lowest in last 5 quarters. Also, the gross NPA, they remained elevated at 8.9% versus 9% on a sequential basis. Let's see how the stock reacts today. Back to you.
Okay, so let's do a quick recap then of our top stocks to watch. The stocks with positive news flow today: L&T, Ambuja Cements, Bharti Infratel, Canara Bank, Sanofi India, Group Finance, Shriram City Union, and stocks that could have a negative impact today: Hero MotoCorp, IRB Infra, Intellect Design, and Reliance Nippon Life AMC.
Okay. Well, with that, let's invite our first and very important guest. After all, the Nifty is very close to record highs, not quite there yet. Mark Matthews of Bank Julius Baer and Company joins us now. Good morning, Mark. Thank you very much for joining us today. Well, first up, assess the global environment for us. Are trade tensions declining at all after this? After Trump supposedly blowing the peace pipe after the talks with EU?
It looks like they are. Of course, we don't know the outcome of the meeting with EC President Jean-Claude Juncker, but the tone seemed to be quite nice going into the meeting. And I think more importantly, the Mexican president-elect Obrador has been extending an olive branch to Trump for the last couple of weeks. He sent a letter to Trump, and Trump responded. And one of the Mexican chief trade negotiators said he's hopeful that there can be a positive conclusion to a new relationship, trade relationship between the two countries within the next few months. So indeed, yes, it looks like these trade tensions may be starting to ease off a little bit.
Okay, so the trade tensions are easing off a little bit. Mark, hi, good morning. The other big headline this morning is the way Facebook has collapsed after the kind of slowdown in earnings that they reported. You think the FANG stocks still have some more time to go on the upside, or is this going to be the start of a cool-off period? And how do you think the US markets would react to that?
Well, actually, the earnings weren't down, but they did say that their revenue growth could slow in the future because they'll offer better privacy controls to their users. And I would just say that it only takes the share price to bear it where it was back in late May, believe it or not, which just shows you how well it's done between then and now. And if you look at NASDAQ futures, they're down less than 1%. So I don't see we're saying any sign of contagion. But it does teach us a lesson that companies that miss their expectations when expectations are as high as they are in the United States right now, you know, their share prices will suffer as a result.
Okay. Well, how are you approaching emerging markets, Mark? For some time now, the developed markets have been preferred, and we have seen outflows from EMs. Is that looking like reversing at all?
It does seem to be, indeed. In fact, the foreign outflows in emerging markets, if you just look back at the history of them, around this time is where you should see the outflows just starting to dissipate. Of course, history doesn't repeat itself, it does rhyme, so maybe not exactly this time. But we also have the news coming out of China first last week that they were easing off on a lot of the tough new measures they'd put in place on their so-called shadow banking sector. And then secondly, on Monday, the State Council, which is sort of like their cabinet, saying that it was going to come through with new stimulus measures. So that, I think, is the much more impactful news on the emerging markets, that China seems to be doing a U-turn on policy, no longer purposefully slowing down the financial sector. And that, I think, will continue to show, to cause a rally in the emerging asset class.
What have you made of what we've seen in India so far, Mark? We're in the thick of the earnings season, and we're seeing some improvement across the infrastructure basket, whether it's names like L&T, the cement names like ACC, etc. Would you put incremental money into the Indian markets in anticipation of improvement in earnings?
No, probably not, because it's true the earnings are good, and that's a continuation of what we already saw for the previous 2 quarters. But I think what could be a bit of a problem for India is that there was money that went into India because it didn't want to be invested in China. It went out of China to go into India, and now the Chinese story seems to have all of a sudden gone from bad to good. There is a risk that that money could go out of India and back into China.
Okay. Fair point. But how do you assess the Indian earnings scene per se? Do you think that there are attractive opportunities, value left on the table?
Yes, I do. There's always lots of interesting things going on in India. And with the exception of Bajaj Auto, I think that basically the tone looks very, very healthy for the rest of the year. And the GST cut, of course, would be beneficial to the consumers. I would expect further weakness in the currency because the U.S. economy is just booming now, and the Fed will probably continue to tighten, so that would take you toward the IT stocks. I think they can continue to do well. But on balance, I do think we will have this headwind coming out of fund flow reversal going back into China.
Okay. Well, there is a RBI monetary policy around the corner on August 1st. A poll that CNBC TV18 did indicated that there is a chance of a rate hike. Actually, the number of naysayers were slightly more than the number of people who said there would be a rate hike. But if there is indeed a rate hike, will that alter your opinion?
No, I would have anticipated one anyway, but it looks like if they want to, they can delay, because they do have two excuses. The first excuse is the trade war. Having said that, tensions seem to be coming down a little bit, they're still pretty elevated. And the second is the recent weakness in the oil price. So if they wanted to, they could delay the
Okay, so just one final question from my end. You did mention that ex of Bajaj Auto, the trend has been quite positive as far as earnings are concerned. What have you liked particularly? Because we've seen, if you cut through the sectors, we've seen good performances, whether it's TCS, L&T, Asian Paints, ACC, all of them have done well this time. What have you particularly liked?
I think we do like SBI. We feel that the NPAs have probably peaked out for the banks as a whole, and that is still a very inexpensive share. It's the best, of course, of the PSUs. We like the consumer sector, as I said earlier, the IT sector. But yeah, that's what I would say.
Okay, well, actually, that was going to be my last question. You almost answered it. Do you think we are behind the NPA problem? Until now, most investors have preferred the retail lenders, the HDFC Bank varieties. Do you think it's time to look at the corporate lenders, ICICI, Axis, SBI, BOB?
On a selective basis, yes. I think our feeling is that the NPAs have peaked unless the RBI chooses to come out with some new study, that would guide for higher provisions. But in the absence of that, and it doesn't seem to be forthcoming, the economy is robust, as the earnings are showing us, and therefore, and all the good work that's been done, over the last couple of years, the NPAs should be peaking here, yes.
Okay, how worried would you be about the election season that we are heading into? November is the first big state election, Rajasthan, and then you will have elections in Madhya Pradesh. They'll keep following, and the general elections in March, well, not quite March, April, May. Up until then, would you commit money? Would that be a worry at all?
It's not a worry for me in the sense that I do not see the opposition at this point being able to master a broad enough coalition on a federal basis, nor is there an apparent leader, who has the kind of charisma or aura of the Prime Minister to really go up and win the next election. But I do think it will keep foreign investors at bay, because it is an uncertainty that is out there until the election's out of the way.
All right. We'll leave it at that. Mark, Matthew, thank you very much for dropping by in the CNBC studio.
Thank you.
And giving us your views. We have to take a quick break. Our technical experts are waiting by Ashwini Gujral.